Hello and welcome back to another episode. So in today's lesson, I'll teach you 3 steps price action strategy you can use to maximize profit. So I'll urge that you watch this video to the end, and I promise you'll learn something new from this video. Without wasting much time, let's dive in. Hello and welcome back. So like I said earlier, I'll teach you some 3 steps price action strategy that you can use to maximize profit. Now when we say price action, what does it mean? Price action strategy simply means using the price movement of an underlying market to attempt to predict future market movement, or simply trading without indicators. So in just a simple term, trading without indicators. So when we are not trading without indicators, then what are we trading with? At this point, we are talking about support and resistance, chart pattern, candlestick pattern, supply and demand, and so on. So today I'll take you through some 3 simple steps you can use in trading this price action. So the first step we'll talk about is identifying the trend. And when we are talking about identifying the trend, then probably we are talking about market structure. So when it comes to market structure, we have 3 types of market structure. We have the uptrend, the downtrend, and the consolidation. And when we are talking about the uptrend, then we are looking for buying opportunities. And when we are talking about a downtrend, then we are looking for selling opportunities. And when we are talking about consolidation, then we are selling at the highs, the equal highs, and buying at the equal lows. So the first thing you have to look for before you enter a trade, or the first step you have to look for when trading price action, is the trend. So let's look at something here. Look at this chart here. What can you see? You can see that price is moving in an uptrend because we have a push, exhaustion, a push, exhaustion, a push, and we are waiting for an exhaustion before we continue the push to the upside. So this is an uptrend market. Now what is the second step we have to look at? The second step we have to look at is key levels. We need to mark our key levels. So right after the trend, then we are going to mark our key levels. Okay, our first key level is around this area, which you can see the price has retested around this area. So you can see the breakout and the pullback to that key level. And our next key level will be at this point. So we'll be waiting for price to retest that point, and then we look for an entry. Now right after this key level, we also have a trend line here. This is our trend line. You can see this is our trend line here. I also have a video on how to trade with trend lines, how to properly trade with trend lines, the things you have to look out for both beginners and already existing traders. So this is our first touch here, this is our trend line, this is our second touch, and we would be waiting for price to touch the trend line for the 3rd time, and that will confluence our support and resistance at this point. You know, when we are talking about Fibonacci retracement level, then we are talking about an indicator. So we are not going to use the Fibonacci retracement level. If not, when we drop the Fibonacci retracement level, you see that we are on a golden zone. My golden zone is always 50% and 61.8%. So the retracement will be on the Fibonacci retracement level. So you see the number of confluences we have here. We have the support and resistance, we have the trend line, and we also have the Fibonacci retracement level, the golden zone, which is either 51 or 61.8. So this retracement should be on 61.8, but since Fibonacci retracement 2 is an indicator, we are not going to include that now. So what are we going to wait for? We're just going to wait for price to come back to the trend line and the support, then resistance. Then we look for buying opportunity. So you see what just happened. Now price is nicely on the trend line and the support, then resistance. So we talked about the first step, which is the identifying the trend, the second step, which is our key levels, marking our key levels, which is the trend line, the supported resistance, like I said. And I was also talking about the Fibonacci retracement level. So our next step is entry. Our next step will be our entry level. Now, anytime you are trading and price gets into your key level, does not mean you should start buying or selling. Now, when you look here, you can see that price was moving down. You can see that this is our bearish candles. Now, when this price is moving with all this momentum or bearish candles and price gets into my key level, I don't just start buying because I have all these confluences here. No, I have to look for an entry. Now, what I do is that anytime price gets into this key level, this is a bearish candle, I wait for another bullish candle. Immediately I see a bullish candle, I have then determined my resistance point. Now, this is on the 4-hour time frame. I always explain that I love doing most of my analysis on the 4-hour time frame because it gives me a clearer picture. It's not a downtrend, neither is it an uptrend, and it also gives me a clearer picture. So from here we can move to the 1 hour and look for an entry. But then if I find a very good entry on the 4 hour, I also enter without stress. So immediately a blue candle is found, I have found another resistance point. So this is another resistance point. So the next thing I'll wait for is for the next candle to close above this new resistance point that has been found after the bearish candle. So let's look at something here. A new candle that will be formed right after that. Now you can see what happened. You can see that this candle has broke above the new resistance point. So right after that, what are we going to look for? We just pull out our short position, long position to drop it here, our XL a little below the trend line, then our take profit to the nearest support or resistance. So you can see what is happening here. This is our take profit to the nearest support or resistance, and our risk to reward here is 1:2, a very good risk to reward. Now let's look at the reaction of price around that area. So you can see how simple this is. You just look for the trend, look for you mark your key levels, then you look for an entry. This is for price action traders, a very simple step you can use in trading price action. So you can see what is going on here. Look at what is happening here. You can see how price is behaving in the long position too. So you can see what happened. Our TP is triggered nicely. Look at what has happened here. Our TP is triggered nicely. Now let's look for another example. This is another example. The first example we did was in an uptrend, and we are now on the downtrend. Now when you look at this chart, you can see that price is moving in a downtrend because we have a series of lower lows and lower highs. You can see what is happening here. We have a series of lower lows and lower highs. Then at this point we have our resistance level. We have our resistance level here. What we are waiting for is for price to push up, this way. So we have the drop to the downside. We're waiting for price to push up, then we continue something like this to the downside because we are in a downtrend. Now the second thing I did was to mark, or the second thing we have to do here is to mark our key level. So where's our key level? This is our first key level. This is our first key level, which is our support, then resistance. Then our second key level here is this trend line. So after drawing the trend line and the support and resistance, you can see that we are having what? We are almost having a chart pattern. This is a chart pattern around this point. Now the only thing I'll do here is that when price breaks above this trend line, I'll start looking for buying opportunity. So when price breaks above this trend line, I'll just wait for price to break, come back for a retest, and then I'll start looking for buying opportunities. But since we are in a downtrend, I am looking at selling from this point. So what I'll do is when price breaks this point and comes back for a retest, so when price breaks this point, I only wait for price to come back for a retest, then I can continue selling. So this is my key levels. Let's see the reaction of price, then we can now look for an entry. So have you seen what has happened here? You can see that price has broken, and like I said, we are in a downtrend, so we look for selling opportunities. Now price has broken the support 10 resistance. What are we going to wait for? We now wait for price to come back into this zone as a retest or a pullback, then we continue selling. Now let's look at what happened after the breakout from that zone. You can see what is happening here. You can see what is happening here. You have to look for an entry. We have two types of traders. Okay, so we have traders who enter aggressively. Immediately price gets there, they are entering. Then we also have traders who enter conservatively. So aggressive traders would have entered from here. Immediately price breaks the zone. Now conservative traders will wait for a pullback. So this is our pullback. Like I said, when you are drawing your zone, you draw it as a zone and not a line. I have a video on that. You can also check that, how to properly draw support and resistance zone and the rules you need to follow. So you can see that at this point price has broken out, came back for a retest. So the conservative traders will now take their entry from this point. Now let's look for an entry. So we talked about the trend. We've identified the trend, we've identified our key level. Now our key level here is also on a psychological level. So the last thing we have to look out for is the entry. Now when you look here, you can see that price has entered into our key level, and the candle that has formed here is a blue candle. So I'm going to look for my new support. So when I'm looking for a new support, I wait for another bearish candle, because when you look at this side, you can see that the bulls are still in order. So when price gets into the key level, I don't start selling immediately. I have to wait and see a bearish candle to confirm what I am looking at. So here we have a bearish candle. So when I see a bearish candle, what will I do? I'll just draw my current. The moment a bearish candle is formed, we found our new support. So what will I do? I'll just wait for a candle to break this new support with a body, then I can take an entry. Now look at what happened here. You can see that price has broken with this candle, and the body that has broken the candle, the body that has broken the support zone is bigger than the body that was left behind. I also have a video on that, you can check that out. So immediately I see this, I just pull out my short position to drop it here, my SL a little above the previous high or in the middle of the zone or above the zone. Then I take profit to the nearest support or resistance. And look at our risk to reward. We have 1:2 risk to reward, and this is a perfect risk to reward. So look at what happened here. Let's look at the reaction of price here right after identifying our trend, our key levels, and our entry. Let's look at the reaction of price here. You can see what is happening. You can see what price is trying to do here. You can see what is happening here. Let's look at what is happening here. You see why my stop loss is here. You know, anything can happen in this market, so you have to be very careful when determining your stop loss and your take profit. Now look at what is happening here, and finally our take profit is triggered. See, this is our take profit. So finally our take profit is triggered. So this is a very simple 3 steps you can follow when trading with price action. I hope you've learned something from this video, and I would advise that anytime I teach anything on my YouTube video, go back and back test. You can back test, and if it's working for you, you go with it. I'll see you in the next video, and if you've forgotten to hit on that subscribe button, hit on it now, leave a comment below, and also hit on the thumbs up button. I'll see you in the next video.